All right, so in this video, what we're going to be looking at our income statement ratios. Okay, here is your sample income statement for your business. Okay, and at the bottom, you have all the ratios that you need. Okay, now to start off with, the way this income statement is formatted, okay, all you need to do is fill out your values for your sales and your operating expenses, and the income statement will do the rest. Okay, for this video, we're going to change the value for your sales, and this will be $738,300. All right, as you can see over here, the income statement automatically calculated your net sales, okay, which came about $724,212. Okay, apart from that, based on your net sales and your operating expenses, okay, your net profit came about $15,293. Okay. All right, so apart from your net profit, we will also need our shareholders' equity from our balance sheet in the last video, and this was $172,749. Total assets, 264,704. Accounts receivable, $29,600. Total preferred shares, 1,000. Per share value, $50 per share. Okay, dividends for preferred stock in percentage. Okay, this was 10%. Total common shares. Okay, this was 9,800. Okay, so based on these values, okay, the calculator automatically calculated your return on equity, okay, which came about 8.85%. Okay, which basically means that for each dollar the owner invested in this business, okay, the return was 9 cents. Okay, industry standard 15 to 20%. Return on assets 5.77, which is roughly 6. Okay, which basically means for each dollar of business assets invested by the owner, the return is roughly 6%. Okay, now between these two, if your return on equity is more than your return on asset, it could mean two things. One, you invested your personal assets into the business, or two, you borrowed money from private lenders or the bank, okay, to make investments in your business. Okay, now this is not really a good scenario if your return on equity is more than your return on assets, especially for an investor. Okay, now apart from that, this is your sales to receivable ratio. Okay, this ratio is 24.46. Okay, and this ratio basically tells you if your company is able to collect money from your customers. Okay, so if you sold your inventory on accounts, this ratio tells you how successful you were in collecting money or accounts receivable from your customers. Okay, the lower the ratio, the worse. Okay, for that reason, you really need to bump up this ratio and make sure you're able to collect money, collect accounts receivables. Okay, so you need this ratio from a cash flow point of view. If you need to make investments in your inventory, if you need to buy stock, okay, you need liquid assets. Okay, and your cash in your bank is one of those liquid assets. Okay, so apart from that, you also have your average days collection. Okay, this was 14.71, which is roughly 15 days. Okay, which basically means it took about 15 days to collect your accounts receivable. Industry average is 90 to 120 days. Okay, now this figure is important for an investor, okay, because it shows the investor if there is any kind of probability of uncollectible accounts. The longer it takes, the more the uncollectible accounts. Asset turnover, this is 2.73, okay, which is roughly 3 cents. Okay, and this basically tells you that for each dollar of assets, your business had 3 cents in sales. Profit margin on net sales, 2.11%. For each dollar of sale, business made 2 cents in profit. Industry average, once again, is 25 to 40%. Operating margin of profit ratio, This is 2.76, which is roughly 3 cents, which basically means for each dollar of sales, business had roughly 3 cents of gross profit. Okay. Industry average for a manufacturing business is 7 to 10%. Okay, some factors that might affect this margin. Okay, these are things like efficiency in production if you're a manufacturing business. Okay, products manufactured, whether these products are in demand, as well as customer ratings. All right, apart from that, you have your net profit ratio, which is 2.11%, which basically means for each dollar of sales, company earned 2 cents as net profit. Interest on bond ratio, 8.68. Okay, which basically means your total income is 9 times your interest expense. Okay. Industry average is 3 to 5 times for a safe investment. Earnings per share, $15.29, which basically means your shareholders earn $15.29 for every share. Dividend requirement, this is $5,000. Okay, so this is the total dividend figure that your business needs to pay out to your shareholders. Okay, so this is your preferred shares. Okay, so these are your dividends on your preferred shares. Okay, dividend payout indicator 3.06, which is roughly 3.1. So your net profit is 3.1 times your dividends. Okay. Earnings available for common stock $10,293. Earnings per share $1.05.